Hey everyone, welcome back. Today's going to be a bit of a different kind of session, and I've got Steve here with me. He's a big part of what we do behind the scene, and he plays a huge part in helping me source a lot of deals that our clients end up buying. Steve is actually a very experienced property investor himself, and he's actually built a portfolio of 8 properties across Queensland, Victoria and WA. 8 properties, is that right, Steve?
Correct, yep.
Yep. So I thought it'd be a good idea to get Steve in here so that we can just sit down and talk through a question that I get asked all the time. And that is, how do you actually choose where to invest? And how do you know what type of property to buy once you're looking in that area? So we're going to be talking through how we look at data, how we choose our suburbs, and what we think of capital cities versus regional areas. And then we're also going to talk about how we figure out what makes a good property and what makes a dud that we should avoid. The good thing about this conversation is Steve and I don't always agree either. So you're going to hear about both sides. So hopefully this gives you a clearer sense of the way we think about this stuff and why we think it works. Now, just a quick note before we dive in, nothing in this episode is financial advice. It's all general in nature and based on our personal experiences. Everyone's situation is different, so if you're thinking of making any big decisions, make sure you speak to a licensed professional who can assess your individual needs. So let's get into it.
All right.
Okay, so Steve, welcome.
Thank you. Thanks for having me today.
No worries. Just for everyone listening, Steve, can you just tell us a little bit about yourself and an overview of your property investing journey?
Yeah. Believe it or not, I actually started going to home opens and auctions at the age of 3 with my aunties. That's what my parents told me. So I've always had the idea of using property as a vehicle to get to financial freedom. In terms of where I start in property, I purchased my first in 2010. The next one was in 2016, had a bit of a lag period because of other personal circumstances with buying a pharmacy.
Yeah.
But I didn't really get into property, gung-ho until 2021, where I got a little bit more educated and bought the next 7 properties essentially between 2021 and 2024.
Yeah, so absolutely flying in the last 4 years.
Yeah, and I guess that's important because the market is starting to move because more and more educational is out there in terms of learnings for people. So,
okay. Yeah. And I've seen the way that your portfolio has grown over the last few years, and it's almost like a lot of the properties that you've touched in the areas that you've bought in have turned to gold.
I like to hope so.
Yeah. No, when I was looking at your portfolio, I was like, oh, you picked that location, perfect time.
Yeah.
That one. And that's why I love working with you, because it's just super helpful. So I guess at a high level, to you, what does make a good location or a good property when you were looking at those areas for yourself?
Yeah, for myself, I knew that I wanted to grow a portfolio quite quickly. Given that, at my age at the time with where I am financially, I knew that buying properties quite quickly was what I needed to do.
Yeah.
So I need to pick locations that I knew that were going to be, boom markets essentially.
Nice.
And I don't like to buy properties, mid-cycle or towards the end of the cycle. I like to buy at the beginning of each cycle. So, for example, if I just picked a location, in 2022, I bought in Kerwin in Townsville.
Nice.
And people weren't really touching Townsville back then, but now in 2024, 2025, it's gone bonkers. Absolutely. So you need to buy, timing is quite important in terms of entry into a market.
I know Townsville's been probably one of the hottest markets over the last 2 years. I even thought about buying in Townsville for myself in 2023. And even at that stage, I just thought, it's a little bit too late for me. I wish I bought in 2022. You absolutely timed it perfectly there. So this just leads me into the first part that I want to talk about. So as I mentioned before, a lot of people always ask me, how do you go about choosing what markets to buy in, what suburbs to choose? So the first part that I want to talk about is data. Okay, so my approach and our approach is very much data driven.
Yeah.
I will look at a lot of different data points to indicate that demand is exceeding supply. I want to see that demand is building and growing, and I want to know that supply is either staying the same or shrinking.
Yeah.
Because if
Shrinking. Absolutely.
Yeah. But at the very least, remaining low. Because if the demand exceeds supply, then you can see that pressure building. And when you get that pressure of demand exceeding supply, that's when prices have room to grow.
Absolutely.
Okay. So there's different types of metrics that we'll look at. And some of the main ones that we'll look at is things like stock on market. You want to see that listings are low. Okay. You want to know that building developments or building approvals are low as well. So there's not a lot of huge supply hitting the market. But yeah, stock on market being sold, you want to make sure that that's remaining low. So if listings are low, then competition is going to be high for those listings. You want to know that days on market is trending downwards. Because if it's trending downwards, then you know that pressure is building on the market. It's starting to heat up and people are wanting to secure properties a lot quicker. Their buyers are sort of getting on to the fact that you need to move quick if you want this property, and then it starts to become very quick for properties to fly out the door. Okay, so days on market trending down. Anything else that
I like to look at vacancy rates.
True.
So not just vacancy rates, but how many properties are available for rental at any one time within a suburb and surrounding suburbs. So what I do look for is when I'm looking for a property at the same time, besides looking at what's for sale, what's for rent.
Yeah.
So I would search for a suburb, just say suburb X, and if there's 10 or less properties available for rental, I know that my property that I will purchase will rent out quite quickly. So that's another metric that I use.
Yeah, I like that. Yeah, I like that because, like you said, you want to know that if you're going to buy this as an investment property, that it is going to be easy to rent.
That's it.
So what's a good vacancy rate?
Anything less than 1% is...
1%?
Yeah, I'm quite tight. So people normally say 2 to 3%. I like to stick with 1%.
Wow.
So it's more stringent.
You're not always going to get 1%.
Well, all the suburbs that I've purchased have been less than 1.
True. But for me, 2% was always the benchmark. 2% to me is what's known as a balanced market.
Yes, correct.
So balanced market being like equal power between renters and landlords. As it gets below 2%, there's less rentals in the market. And then you could say that the landlords have the power.
Yeah.
Okay. Because there's going to be a lot more people queuing up for rental properties and less properties available. So less than 2% is what I would go for.
Yeah.
Okay?
I think.
But if you get less than 1%, that's absolutely beautiful. Yeah, that's when you can really start to dictate the price of your rental property and maybe charge more rent.
Charge more and be picky with whoever you select.
Exactly.
And your PM's the best person to help you out with that.
Exactly. And that's where you're in a position to basically say, oh, well, this property should rent for about 500 a week, but because of the state of the market and the low vacancy rates, you could probably push 530 or even 540 and someone good will pay it.
That's it.
Yeah, cool. The other thing that I often like to look at when I'm choosing a market to buy in is economic and employment diversity. Okay, so as I mentioned before, we don't like to choose areas that are heavily dependent on one industry, like mining or agriculture. I love choosing markets where there's just a good, diverse employment. So things like manufacturing, they're good, construction, but professionals. I love looking at areas where there's a high percentage of professionals like accountants, lawyers, and looking at trends between the different census states where you see like the percentage of professionals or professional jobs in the area moving up. Okay, that shows that there's more professional.
I also like looking at healthcare.
Healthcare,
Yeah, healthcare is a very big one for me. Being in the life science industry, healthcare is important. Yeah,
healthcare is probably one of the best employment industries you want to see growing in an area if you're going to invest there, because they're in very stable jobs like doctors, nurses, even what else is there within there? I mean, there's just like even hospital staff.
Yeah, anyone in the hospital is just staff that they need to.
And they're in stable jobs, so that like even if there's like a in a crazy event like a pandemic,
Yeah.
they're going to stay employed.
It's a necessity.
So that's a really good point that we love to look in. And then the other point that I will touch on is infrastructure projects. It's good to know that an area will have all those data points, but then if there's some infrastructure projects going in, then that's great because it just creates more employment opportunities.
Yep.
And if there's more employment opportunities, then there's a chance that more people will move into the area, make money, spend money in the area.
Also depends.
Buy houses.
It also depends on what type of infrastructure facilities. If it's like a road, then not so much because you need the constructions to occur. But once the roads are built, they're out of there.
That's true.
So you want to pick industries that they're throwing money at, and they're actually like a hospital, it's long term.
So if they're building a new hospital, then that attracts more healthcare workers into the area that are going to live in the area.
That's right.
Yeah, creating. You want the infrastructure projects to
continue and last.
Yeah. But you want them to drive economic activity, create more jobs, and if they're creating the right types of jobs, then that's just excellent. For that area.
Agree.
Yeah. Cool. That's the data side of things. Okay, so we're checking for short-term demand and supply pressure to show that prices are going to go up. But then you're also checking the long-term fundamentals to make sure that it is, a stable place to invest in. So it's not just going to get a big sugar hit of growth and then do nothing or even potentially crash. You want to make sure it's got the legs to last.
That's it. Yeah. So, both and I have the same opinion in terms of this. We wouldn't pick a market that's restricted in its industry.
Yeah.
We'll throw Gladstone. I'll say Gladstone myself. I wouldn't pick Gladstone over another location where you've got that long-term potential for that long-lasting growth if it's for a long-term hold.
Yeah.
Rather than if you want to, sell it in 3 years, then maybe Gladstone's your pick. But otherwise, I would not touch.
Yeah, exactly.
Locations such as that.
And that's where we've got to be careful when looking at regional areas, okay? Because regional areas won't often have that employment diversity like a capital city, okay? But there are some really strong regional areas like Townsville, like Toowoomba, Bunbury, where they've got really solid economic diversity and good population as well to, maintain stable employment, okay? But then there are some regional areas where it's not so much there.
Yeah, for regionals, I like to stick at least 50,000 for a population.
Yep. Okay.
I think that's my bare bones for a regional town.
Yep.
Yeah.
Yeah. This actually segues quite well into the next thing I wanted to talk about, and that is capital cities versus regional areas.
Yeah.
Because when we're going through all this, data-driven analytics, okay, to choose these areas, a lot of these areas come up are going to be regional. When you look at it on Google Maps, you're like, well, where's that?
Yeah.
Right? So
Never heard of it.
Yeah, so it's like, oh, geez, do I want to buy in Gladstone? Do I want to buy in Townsville? Or should we just get something in Sydney or Melbourne? So this is something that comes up a lot. And it's something that I'm personally, I do wrestle with from time to time, and that is capital cities versus regional. Okay. Now, we've both spoken about this for quite some time.
Yeah.
I'm a big fan of capital cities, and I always prefer to go in capitals, whereas I know that you've built a big part of your portfolio in regional areas. Okay.
Yeah,
so tell me, what do you like about regionals?
So my portfolio is 50-50 actually. So 50 in capitals, 50 in regionals. Once again, it goes back to where each cycle's at. So it doesn't matter if it's capital, it doesn't matter if it's a regional, just as long as it's at the entry point of the next cycle, that's where I would buy. I wouldn't be guided by whether it's, say, Melbourne versus Bunbury or whatever.
Yeah, okay. I always prefer capitals simply because it comes back down to the economic and employment diversity, okay? I'm not always right, okay, when it comes to this sort of stuff, but it's just for me and my personal preference, because I just prefer knowing that if there's a big population there, then there's always going to be, I guess, stronger demand
And
in
jobs.
that capital city as a whole. I know that someone living in one part of, call it Melbourne, they might live in that part of Melbourne, but they're willing to drive to the other side of Melbourne for work if they need to.
Yeah.
Okay. If that's the only place that they can get work. I also just love that, like, capital cities are going to have that employment diversity. So if a pandemic hits hope it doesn't happen again.
Touch wood.
Yeah. There's going to be enough people in jobs to potentially rent my property out.
Yep.
Or be able to afford my property, okay? Or want to buy it if I need to sell it, okay? So it may not be people queuing up down the street, but at least there'll be a few more, okay? So it's just that population, economic and employment diversity that does it for me, okay? But you mentioned timing the market.
Yeah.
Sometimes that's a lot more effective. That's a much more effective way of making money. Okay, because if you get into Townsville at the right time, versus buying in Melbourne at the time that you bought in Townsville,
exactly, it's done nothing in the last 3 years.
Make a lot more money.
Melbourne,
yeah. Any other reasons why you like regionals?
I think going back to the vacancy rate. So you say that regional might be harder to find tenants if it's less demand, but going back to that 1% vacancy rate, I haven't had any vacancy for any of my regionals to date, because the vacancy is tight in those locations and the demand is there. So, and also depends on the budget. So
true.
At the time, it's actually quite interesting how my pre-approvals have fluctuated quite drastically for each purchase. So it really goes back to where your budget's at. And at that time, I could probably only afford regional. So that was my best choice.
Yeah.
So go for the property with the biggest land, and the fundamentals need to be right.
Yeah, I think that's where you kind of have to make a call because, and we will talk about this a little bit later, and that is understanding the asset type, okay? Because depending on your budget, you may only be able to get an apartment in a capital city. For instance, 600,000. You can only get an apartment in Sydney, okay? Or you can maybe go to a regional area and get a 4-bedroom home on a 700 square metre block.
Yep.
And get in at the right time of the cycle and make a lot more money. Now, like for like, if I was in that situation, knowing what I know now, I'd probably go regional, okay, and buy a better asset type.
Correct.
And time the market a lot better and make more money than buying the wrong asset type in a good market but not make any money. So that's where we've got to kind of
juggle,
balance it. Yeah, and understand what's the most important type of asset to buy at a particular point in time. Yeah, really good. And just while we're on capital cities versus regionals, I will say that I still do really like regionals. And like you mentioned, it has to be the right type of regional area. So for me, it has to be an area where it still ticks those boxes where there is economic and employment diversity.
Yep.
A good sized population. So you were saying minimum 50,000.
Yep.
I think that's a good number. Okay. The more the better.
Yeah, of course.
So you get Townsville's like what?
150.
Yeah, Townsville's almost like a mini capital city or one of the biggest regional town centres.
It is.
Bunbury, about 100,000, okay?
I think so, roughly, yeah.
Yeah, and Bunbury's been one of our favourite areas to buy in over the last
Bunbury's done really well.
As well. So it has to be a regional area where there's a lot happening in there.
And also proximity to the capital city is not that far.
That's a bonus as well.
Yeah.
That's a bonus. It's not always important to me, but if it is close to the capital city, 2 hours drive. So Bunbury's 2 hours drive to Perth?
Roughly.
Townsville, not quite.
No, that's a little bit different. Yeah.
So for
that's
me,
its own hub.
It's its own hub. People aren't driving from Townsville back to Brisbane, but Gold Coast back to Brisbane, Sunshine Coast back to Brisbane, very, very strong areas. But Bunbury is a perfect example. So for me, if I'm choosing a regional area, there has to be enough happening there. It has to be an area that people who have lived and grown up in the area, it has to be an area that they want to stay in, okay, when they grow up. Or it has to be an area where, say, if people are living in a capital city and they may be considering a sea change, has to be an area that they might want to consider moving to, okay? Now, I don't think there's a lot of people who would want to move from Brisbane or the Sunshine Coast or Sydney to Gladstone, okay? But there are people who would want to move from Sydney potentially to Wollongong, and a lot of people do.
Central Coast.
Yeah. It's just Sydney becomes too expensive and they'll move down to Wollongong, or they'll move up to Coffs Harbour or things like that. And that's the thing. There's a lot of people who have moved from Perth to Bunbury for lifestyle reasons. And there's a lot of people that I've spoken to in Bunbury who've been there all their entire lives, and they're like, I love this area. Never want to leave. It's just beautiful.
Yeah, like you said, talk to the locals and know what's the demand and what people are after.
Yeah, exactly. Whereas if you're in an area where there's not much employment opportunity, when the kids grow up and they're like, oh, well, there's not much for me here. I'm going to move to a capital city for more work. Okay, so that's where I would be very careful about choosing regional areas. Has to be an area where it has all those fundamentals in place, because when you have those in place, people are going to make money. Okay, they're going to have jobs, make money. They're going to stay in the area. More people are going to move into the area, and that, I guess, somewhat puts more pressure on demand and supply for prices to go up.
Yeah. Regionals are great, but there's also their cons, of course.
Yep.
You have your high insurance, you have your high council rate. So you have to find the balance, whether those net yields actually make sense. So you have to do your due diligence and calculations, right?
It's all about finding the right kind of regional area and making sure it has those fundamentals. Yeah.
Correct. Yeah.
And but also factor in cash flow. Yeah. But some regionals can actually have really strong rental yields as well. So that's why it is often overlooked, okay, buying in a regional area, because a lot of people are very fixated on capital cities, like myself, okay?
And others.
Yeah. But I have been, like, I do see the strong benefits of going regional for the right type of client brief and strategy.
All goes back to the strategy and where they're at with their portfolio journey. Yeah.
Okay, let's drill down into suburbs. Okay, so let's just say we've decided on buying in a particular, I don't know, should we go capital city?
Yeah, why not?
well, let's talk about Perth. Okay, let's say we've decided that Perth is the market that we want to go into, and that's what we've been doing over the last couple of years.
Yep.
We were spending a lot of time in Perth, and then we're choosing which suburb in Perth do we buy. So okay, what would you do?
Start with the budget. So just say a client has a budget of, say, 600,000. You'll need to pick the best 600,000 suburb that you can purchase in. So with the amount of money that you have, you would want to pick the highest or best property type that you can buy, which obviously would be a house.
Yep.
We haven't spoken about this just yet, but I would always stick to a house over a townhouse or a unit or apartment for good riddance. But the best property type that you can afford depending on your budget. That's where I would start. And that would filter through which suburbs that you can actually go for. And then going back to the fundamentals such as your supply and demand metrics, lifestyle, and where people want to be.
Yeah, absolutely. So for me, if we have a budget, I would always kind of ask myself, what is the highest quality suburb or the most desirable suburb I can get into for this budget, okay? But then with that budget comes the asset type as well. So you mentioned houses. We always try and buy houses wherever we can, but it's the right balance between buying a really good quality house in a really good quality location. So desirability is very, very important to me. Things like, I'm very big on affordability and affluence, okay? Basically, higher socioeconomic areas are always my preference, okay? I know that there's a lot of people out there that don't mind buying in low socioeconomic areas because they're cheaper and they've got a lot of potential for upside. I see that, but for me, I just believe that higher socioeconomic areas that have more affordability, okay, so their income levels are higher compared to the mortgage price or house prices, they're the ones that have the potential to drive upward pressure on prices, okay? And they're the ones that will, they're like more people with higher incomes are wanting to move into that area. They're the ones going to drive the prices up.
Like you said, the affordability is quite important because if the locals can't afford that area, they're going to move elsewhere. And like you said, with the socio levels, obviously the higher the better, but we've seen examples such as Armidale, the lowest that you can probably find in Perth. That's done really well. However, it's probably at a cap now. Whilst you're more affluent, they're still growing because their wages are still growing.
Exactly. I always think that, as people start to make more money, they're going to want to live in better suburbs. Okay. But then when those suburbs become unaffordable for, I guess, people on lower incomes, they start migrating out to cheaper suburbs, and then they'll drive the prices up there as well. Okay. That's why I always try and buy in the suburbs where people are going to come in and drive the prices up. You want to just know that the affordability is there. So affordability, socioeconomic status, desirability.
And we like to stick with that. They can pay the loan off within 40 years.
Within 40 years is ideal, yeah. Just let's touch on low socioeconomic areas, okay? Because they still go up in value.
Yeah.
Okay.
Everything goes up.
Yeah. Even areas like Mount Druitt or Blacktown in Sydney where the incomes are lower, they've still doubled over the last year. When I was first looking for properties, it was costing about $400,000 for a house.
So cheap.
So 1.2 million now. Okay. And that's driven by local owner occupiers. I don't know how they do it. Okay. But that's great. It's great for growth in the area. But this is one thing that I'm always a little bit wary of, and that is if an area has really low incomes, how are they going to drive growth in property prices in the area? How is someone who works in an unskilled job, low income job, going to be able to afford to buy a house that is 1.2 million in 10 years' time? Right. And that's why it comes back to income and affordability. I always try and buy in higher income areas just to have that long-term reduced risk. Yeah.
No, it's a tough one because, income levels are very important. And like if you're picking the worst suburb of a city, where else would they move?
Yeah.
You're at the bottom of the lowest level suburb possible.
Exactly, yeah.
Would you move to, say, a regional where it's cheaper?
I don't know, yeah. But that's what happens as people start getting priced out of the nicer suburbs, call it, the nicer suburbs of Perth, say Huntingdale.
Yep.
Okay. And then they get priced out of Huntingdale, where are they going to go? They might go to
Gosnell.
Thornley, right? If they get priced out of Thornley, they're going to go to Gosnells. And then what happens there? Then they'll end up in Armidale.
Yeah, but after Armidale, where else do you go?
Yeah, exactly. Yeah.
So I wouldn't pick the worst suburb of a city or location. Yeah. You'll pick somewhere in the middle. You wouldn't go top end because that's not investment worthy.
Because they're already overpriced. They're overpriced by people who just make so much money and they're just paying whatever they need to. Yeah, so it's got to, I always try to get into more of the middle class suburbs, but upper middle class. For me, and when I was buying in Perth, I bought in Thornley.
Yep.
Okay. Now Thornley can have a bit of a stigma about it. There are parts of Thornley that
pockets within pockets.
Yeah, but then there is part of Thornley that's actually quite nice and desirable, and there's a lot of young families there, good income levels, and strong affordability. Right. So they're the types of areas you want to get into. Huntingdale as well, absolute beautiful location of both data wise and fundamentals. To buy in.
Yeah.
So those are examples where, of good suburbs to buy in.
Like you said, you need to really pick the nicer pockets of each area and you need boots on the ground or a very, a BDM or PM that you work with very closely to give you boots on the ground information.
Yeah, yeah. So and that's actually, it's good that you mentioned that point because we're doing all the data analysis to choose these locations. We're then understanding which locations are more desirable and have strong affordability, but then you've actually got to talk to locals. And that's why I call this, I've got my data-driven approach, but then once all that's done and you've narrowed it down, I call it my qualitative layer.
Yep.
And that's where we talk to locals, local property managers, local real estate agents, and even like friends or family who live in the area and say, okay, who lives here? Is it rough? Is it not?
Yeah.
Okay. And a perfect example of this. Yeah.
Yesterday, right? Where boots on the ground, go to the local shopping centre, just hang out there for 5 minutes. You'll find out who lives there.
Yeah. And whether it feels safe or any questionable looking people. But I think for me, a perfect example of this is when we were looking in Bunbury and there were areas with absolutely phenomenal data. Okay. Strong demand over supply. Not necessarily affordability, okay, but good rental yields, days on market trending down. It's absolutely hot. And there's an area in Bunbury, okay? And then we're talking Kerry Park and Withers.
Yep. Okay. Your favourites.
Yeah. Now, you start talking to people in the local area, and they start, they take a deep breath when I mention those suburbs. And then I'm like, okay, tell me a bit more. And then they start to tell you that, oh, geez, it's quite a rough area. And then you start seeing properties in the area. It's like, hey, I've got this property off market. Do you want it?
No thanks.
And you're like, but look at the yield. I'm like, no, I'm not doing that one.
Yeah.
But, so that's where you just got to be a little bit careful that despite all the data looking good, if the local on the ground feedback about that suburb is, I wouldn't touch it, then it's like, who else is going to want to live there locally?
And if you do end up with your Withers or Kerry Park property, you're going to have a dodgy tenant. And it's
higher likelihood of that. And that's where you got to be careful because, yes, there is no correlation between socioeconomic status and growth. Okay, we've seen that with areas like Kerry Park and Withers that have grown. Rougher areas of Townsville like Kelso have grown in value, and even Armidale in Perth has gone up. Mount Druitt in Sydney has gone up. Okay, so there's no correlation to low socioeconomic status and growth, but there is that extra added potential for headaches. Okay, now rental yield is going to be great, but rental yield can go through the floor if you have tenants that all of a sudden trash the place or can't pay rent. Okay, and this is where and that to be fair, that can happen in Bondi, Sydney. Yeah. Right? But there is just that added risk, okay, of dodgy tenants and added headaches. And that's, for me, is something that I would try to avoid if possible. So instead of buying Kerry Park or Withers, I would prefer to buy in Eaton or Australind, where it's just a little bit more desirable.
Once again, it goes back to the budget.
Exactly.
Yeah, whether you can actually afford Eaton or Australind or Kerry Park.
And it starts where we go back to the top and we ask the first question, what is the highest quality suburb that we can buy in for this budget? Okay. And if we take it back to capital cities, it's like, if I could buy a house in Kerry Park or Withers or a townhouse maybe in a better suburb
in a capital city,
I'll probably take the townhouse.
Yeah.
And now what we're going to do is we're going to segue into what makes a good type of property. Okay, so the asset type. Okay, so this is where we can talk about houses versus apartments versus townhouses. All right. Now, you love your houses.
I love my houses.
All right.
I do have units.
Yeah. Tell me more.
So in terms of units, I have a triplex in Brisbane. So that's a little bit different because it's a triplex. It's all yours.
You own the block.
I own the whole block, yeah. So in terms of that, that's been my cash cow. So it's given me equity to go again. It's given me good yield. It's my cash cow. So in terms of units in that aspect, I'll be fine with it.
Yeah, it's a yield play.
It's a yield play.
Yep.
But going back to the fundamentals, I would stick with the largest land block that you could possibly buy because obviously, as we know, land appreciates and property itself depreciates.
Yep.
So I would stick to a house if possible. Yep. If my budget doesn't allow me to enter a capital city, then I would go for a house in regional.
Yep.
If my budget is still lower than that, I could pivot back to a capital city and go down to the townhouses because we see that house prices go up first, then townhouses and larger units follow suit eventually. So that's where I would go next.
Yeah, that's a good point because whenever these capital cities go through a boom, for instance, Perth, it's all the houses in good locations that are going up in value first. And then once they become too unaffordable, like whether it be for investors or locals, especially locals who want to stay in a nice suburb, they're going to maybe try and think to themselves, can I get a townhouse to stay in Huntingdale or should I be moving back out and getting a house in Armidale?
Yeah.
Okay. So, and that's where the locals and the desirability of a suburb will actually keep people in that area and then they'll start to push up prices in townhouses.
Yeah, maybe I should backtrack one step. When I said go back to capital cities and go for a townhouse, I'll probably go back to a capital city and find a house on a smaller block first.
Yep, okay.
Versus a townhouse because obviously a smaller house would still have smaller land component compared to a townhouse, but you don't have your body corporate fees or strata.
Yep.
So you need to think about that aspect as well.
But then if you find that the only townhouses you can afford in a capital city aren't probably not worth it, then you might think, okay, let's go back regional and try and find a more affluent area, okay, and desirable area in a regional area that people would want to move to and buy a house there.
Yeah.
And a perfect example is when we were looking in Mackay, your more nicer areas like Rural View, Bukasia, nice big 600, 700 square meter blocks, 4-bedroom houses, good quality builds, high income areas, we'll buy there. Yeah. Cool. The other thing I'll talk about when it comes to asset type is desirability. Okay, it always comes down to desirability because that's what's going to attract tenants and that's what's going to attract future buyers.
Yeah.
Okay, so
agree.
Desirability, you just want to make sure it's something that people want. Okay. So I'm always looking for things like, is this house practical? Is the floor plan
Floor plan's
practical?
important.
Okay. Is it on a main road? Okay. Not a lot of people don't want to live, well, I'd say most people don't want to live in a main road. So if you buy something on a highway, chances are when you have an open home on the weekend for tenants or to sell, less people are going to show up. Okay. And
Where do I park?
Yeah, exactly. Anything else?
Main highways, T-junctions, roundabouts, public housing we haven't spoken about.
Public housing, yeah. And I think public housing does come back into understanding the suburb that we're buying in. You want to make sure there's a low percentage of public housing. And no matter what, in any suburb you buy in, there is going to be a percentage somewhere. There might be.
Yeah.
Okay. And you have to understand where those pockets are, make sure that you're well away from them.
Absolutely.
Well.
Yeah.
Like, for instance, Kerry Park. Okay. I'm not against buying in Kerry Park. I have tried to look there for clients, but when you go there, you have to try and understand what's the good part of Kerry Park that we're going to buy in.
There's only one pocket.
yeah, exactly. So, yeah, definitely. I was going to say, when we're looking at asset type, it has to be practical. So if there's a lot of young families living in a particular area, then you want to buy probably a freestanding house.
Yeah.
Probably at least 3 bedrooms and maybe a backyard because
I was going to say the backyard or a local park if you don't have a backyard.
Yeah. But if you're buying in an area where there's not a lot of young families and maybe just couples and no kids, then this is where apartments or townhouses could work. Okay, because if you're looking in lifestyle suburbs like Bondi or Surrey Hills in Sydney, apartments can do really well there. Okay, because the desirability to live in that suburb is high, and the asset type will always be in high demand if you buy the right one.
It's a good point because young families is good tenants because it's unlikely that they would move quite regularly because if their kid is going to a local primary school, you wouldn't expect them to change houses that frequently as well. So that's another layer. That's
actually another reason why I like buying houses because it's always, you find that someone like a young couple or a young family will be living in a 2-bedroom home and they outgrow it and they're like, we need to find a long-term home for our family so we can settle down in this home. Okay. And then they start looking for a house in the suburbs and those houses cost a lot more money. But because they're investing in their long-term future of their family and settling down for schooling and all that, those are the houses that they're willing to pay a lot more for.
Exactly.
Yeah.
I agree.
Yeah. So, yeah. Other areas, well, is there anything else you look for in asset type?
Besides the property type, I look at the floor plans, like you mentioned briefly. So to me, a house needs to make perfect flow.
Yep.
So if there's a floor plan that looks a bit odd or it can't be changed quite easily with a minor structural or cosmetic update, then I probably just would avoid that and move on.
Yep.
As you know, I love value adds.
Yep.
I'm not sure whether you're going to talk about this, but value adds to me is quite important in terms of a selection of a property.
Yep.
So being able to add bedrooms. So if you have like a extra study that could convert to a 4th bedroom or a dining pocket that could turn into a bedroom, but you still have 2 separate livings after the renovation.
Yep.
That's perfect.
Yep. And that appeals to investors who want to be a little bit more astute and force equity growth quicker.
Exactly.
Yeah.
Having that extra layer scope to improve a property to me is quite important because that helps you move to your next one quite quickly.
Because you're quite active when it comes to investing and renovating, whereas for me, I'm a very lazy investor. I don't like doing that. So I actually like properties that are quite nicely done up already, and we call them set and forget properties. But I can definitely see the value in buying a property that might have a kitchen that's a bit ugly, but it's like you just put a couple grand in there, lift the value by 20, 30,000. So definitely good to have that potential to add value, whether it be a cosmetic renovation or adding in an extra bedroom, which is something that's really cool. And we've done that as well. For a client.
And I think it's important. You need to look at the unrenovated versus renovated disparity. So for example, Mackay, I found out personally that the trades in Mackay are quite high, which means it doesn't really make sense to buy a renovator per se. It's probably worth spending a little bit more just to buy a set and forget, because renovations cost so much in Mackay.
Exactly.
So it really depends on the location as well.
Absolutely. And I will add a couple other things into the asset type just for things for the audience to consider. So it's potential to add value and then potential to subdivide. Okay, for those who are a little bit more advanced, you can if there's a big block of land and you can potentially subdivide it, checking the zoning with the council, that can be a really good play. Or even checking if you could build a granny flat and then add value that way and then add to your rental income.
Yeah, granny flats, you have to be careful, because if you're subdividing, building a granny at the back, the tenant pool does diminish a little bit.
It's true.
Because why would you want some Joe Blogs in the backyard? You would rather a separate, especially for families, going back to the family point.
You still got to make sure, and this is where we go back to the asset type and understanding, is the floor plan or the property still practical? So if you're taking away, if you've got a big 4-bedroom home and you've got no backyard, then you're taking away a big part of the tenant pool because it's no longer practical for the big family. So it's about striking that balance.
And for developments, corner blocks are the best. Obviously, you have your driveway for each property.
Exactly.
So looking at corner blocks for that future development potential is better than your battle axes.
Absolutely. Just before we wrap up, I was going to say we've gone through a lot. Okay, so we've talked about the data-driven approach, qualitative, the qualitative layer, understanding who lives in the area and do they have the potential, or who lives in the area, who's moving into the area, and do they have the potential to drive growth in the area. And we've also talked about like the asset types, okay? Before we wrap up, do you have any, I guess, advice or thoughts on just common traps that people would fall into when looking for the perfect property? Because there's a lot of things that we talked about.
Yeah, I think biggest common trap is following the herd. So as I mentioned at the top of the session, that you want to buy early in the cycle. You don't want to be that person that buys in the fourth quarter where most of the growth has already occurred and you get minimal growth because you're at the plateau period. So I think the common trap is people just listening to content, absorbing, say, Townsville. I wouldn't buy Townsville now. Like it's not the right time. I didn't even want
to buy it in 2023.
Yeah, exactly. Yeah. So I think timing the market is very important, and it's a common trap that people forget about and entering a market at the wrong time.
Yeah. I'll also add to that, and that is searching for a unicorn. So I know that we've talked about a lot today, okay, about what makes the perfect property in the perfect area. But it's important to know that you're not going to find a unicorn and you're not going to find a property that ticks all those boxes.
Yeah, it's hard.
Okay? So it's about understanding what's most important to you as a buyer or as an investor, understanding where you're at in your journey and what's most important. So if you're buying a property that needs growth, then it's like, okay, let's find most of the boxes that tick. If you're really fixated on trying to get everything and looking into all the details, you can get caught up in analysis paralysis and not take action at all, and then probably miss a lot of really good market. It's also important not to get too emotional about the suburb or the property that you're buying in, because you're actually not living in it.
There, yeah.
You're investing in it. Okay. Cool.
It's whether the locals would want to live there, not you.
That's it. You're buying in an area that you know locals want to live in. Yeah. Okay. Anything else?
No, I think that's pretty much wraps it up.
All right, cool. So look, we'll leave it there. Hopefully that will give everyone a bit of an insight as to how we go about choosing the markets and about choosing the markets we buy in and the types of properties that we buy. At the end of the day, there's no one size fits all answer, but if you've got a clear framework and you actually know what to look for, it makes the whole process a lot less overwhelming. So to the audience, if you're listening to this and you're in the middle of trying to figure it out for yourself, and you want someone in your corner to help you buy a solid investment, that is literally what Steve and I do. So we work with investors across the country and we help them find the right markets, and we also help them find the right types of properties to look in to match their strategy. And we actually manage the process all the way through to the end. So if you want to, maybe explore what that could look like, please feel free to reach out. But either way, I hope you guys enjoyed this episode and it gives you a little bit of clarity and confidence for your own property search. Thanks, everyone. And thank you, Steve.
Thanks, Eric. Thanks for having me.